Okay, well, thanks very much for attending. It's a pleasure to be here. I'm going to share with you about a business called Comms Group. We're a relatively mature business in that we're generating revenue and strong EBITDA. But we've, over the last 2 or 3 years, we've expanded heavily into the Asia Pacific, such that today we are the most licensed voice carrier across the region. You see some of our history there, and the background on the company. Specialised cloud communications and managed IT service provider, headquartered in Sydney, but with operations across the likes of Singapore, Philippines, and London. And we're a B2B provider, and we have a strong focus on being profitable and cash flow positive. You'll see here our 3 divisions. Cloud communications and collaboration, that's more of a domestic Australian business where we service mid-market corporates with the latest cloud communication services. Our ICT business, which we focus on delivering a secure modern workplace solution. So if you have a really key requirement for IT services, you're a mid-market corporate or bigger, we can service you. And then our global unified communications business for global enterprises and wholesale. Example customers there would include large enterprises, but also the likes of, say, Vodafone Group PLC, who's a key global customer there. We provide all their key services for their large multinational corporates, and then other carriers across the region, such as Tata, KDDI, etc. In terms of key highlights, we just released our half-year results recently. Total revenue was 27 million, slightly up on the previous period. Our underlying EBITDA was 2.4. That was down a little bit. We made a decision, an active decision, to invest in more key resources for our global business because we're seeing some incredible opportunities in that business. Also, a very strong half with new business signed. We made 2 key announcements to the market in the period. We signed a contract with a global SaaS provider out of Europe, one of a known brand, and we also signed a contract to deliver services with a top 5 American technology company, a global company. We're delivering their unified communication services as well. Yeah, we've got a significant pipeline of key client opportunities coming along. Our group gross margin 48%, which is obviously very strong, just under 50%, and also continued to have a strong cash flow position. We do a lot of work to be secure. So today we're ISO 27001 SOC 2, and we've recently been awarded UK cybersecurity, and also we announced an interim dividend. I won't go into this in detail. We have released this to the ASX as well, so you can get this presentation, but a couple of key points from our global business. Those couple of key contract wins that we mentioned, and the fact that we've been expanding into Asia Pacific so we can deliver more countries for our customers. And keep in mind, our customers in our global business are 2 sets of customers. They're large carriers who want to resell our services to their own customers, carriers such as KDDI, Tata, Vodafone, etc., as well as individual enterprises who come into the region and need to open offices across the region. And in the last 3 or 4 months, we've had particularly strong sales in places like Vietnam, where we're providing the key services for large multinationals. This map here shows you our global points of presence around the world. And in particular there, you'll see a note there focusing on what we're doing in Asia Pacific. And we have coverage across the likes of Singapore, Indonesia, Philippines, Hong Kong, China, Taiwan, South Korea, Japan, Australia, etc., where we can deliver the latest generation unified communication services. Financial highlights, I've covered some of those, the revenue, the gross profit, the gross margin being very strong, underlying EBITDA 2.4 million in the half, and operating cash flow positive. I don't intend to go into the detail on these slides, but they're in the pack for those who want to see them. In the half just gone, you'll see that our revenue was up and our gross profit and gross margin continued to increase as well. So really happy with that. Our operating expenses have gone up a little bit, and that's off the back of putting more resources into our global business. It shows our revenue over time, and as you can see, we've had a good, strong, stable growth in overall revenue, which is really good. And also, we're generating very strong gross profit margins and gross profit. And in the half just gone, our global business, as we call it, has grown gross profit. Our ICT business, Secure Modern Workplace Solutions, has grown gross profit compared to the previous corresponding period, 4.8 versus 4.5. And our cloud comms and collaboration business, its GP was slightly off, more competitive market domestically in Australia, but still a very good position, very strong position. And you can see there our EBITDA by various business division. All our businesses are EBITDA positive. Cash flow strong. We did have a customer, if you like, that didn't pay us 0.6 million. They've since rectified that, so we're going to have a very strong half this year. But if we adjust for that, our cash flow from operations would have been 1.8 million versus 1.5 in the previous period, and the previous period was really strong in any event. Balance sheet, we have a strong balance sheet, have cash at bank of circa $3 million. We have a term loan debt facility with the Commonwealth Bank with very reasonable interest rates, and we're not paying high interest rates for that term loan facility. We pay that loan down at the order of about 1.2 million per year, obviously plus the interest as well. Bit on the strategy here going forward. You can see here that we want to continue to have a strong focus domestically within Australia. We want to sell more ICT services to our existing telco base of, say, 5,000 customers. But more importantly than those is the opportunity that we see in APAC and beyond that with these key partners. And typically some of these strategic partners are large telcos. So we're absolutely privileged, I think, to have some of the world's biggest telcos as some of our partners who are out there providing our services to their customer base, and we intend to look to expand our footprint in Asia Pacific and beyond as well. Generating strong cash flows, operating and free cash flows is important as well. And we want to see if we can lift our revenue beyond the 100 million mark. We're around about under 60 million now. And as a result, we're looking at some key acquisitions. In terms of group outlook, for the year, 55 to 57 million, an underlying EBITDA of 5 to 6 million. I think if I was to recap what we see as the investment highlights for the business, firstly, I think the thematic of where we're operating, we're a specialist cloud communications provider. All of the world's largest MNCs and below are moving to cloud communications. And so it's a really strong investment thematic. We have a really strong position in Asia Pacific, where we have licenses in almost every market. We're the only carrier that has that today. And I'd like to compare it with, say, the likes of, say, Singtel or PCCW, Hong Kong Tel, or even Telstra. They typically have a license in one market only. So it's very hard for them to service multinationals. So the thematic of the industry that we're in, we have a strong growth pipeline, and we're continuing to expand our relationship with key strategic accounts such as Vodafone Group PLC. So Vodafone Group PLC has a global multinational. They need services across Asia Pacific. We're their provider. Vodafone Group PLC had coverage of 20 countries. They needed to increase that. We work with them, and we've taken their country coverage globally to 55 countries. So we don't just do Asia Pacific. we do all around the world. So when Vodafone Group now wins a large multinational around the world, there's a very strong chance that we're going to be providing a lot of those services. We have a focus on cash generation, and in particular being free cash flow positive. And in FY24, as an example, we generated $3.5 million free cash flow. And we want to continue to improve shareholder returns, and hence the move to start delivering dividends for our shareholders. A key thing across APAC that I think holds us in really good stead is these licenses, and I think the fact that we've got these licenses bolsters our investment case. And so we can service multinationals now across APAC, across Europe, across North America, and particularly into Oceania. And I think the final investment highlight is, a strong momentum across FY25 with some key recent contract wins. I mentioned 2 of those. One was announced in September, one in November. But we expect to see more contract wins with major blue chip corporates. So thank you very much for your time.